Hey everybody, this is Paul doing dividend videos. The end of the month here. It's November 30th, 12:51. The market is open right now. Um, so I guess let's just go over the market and see what we got here. So as you know, or I hope you know by now, if you even listen to my videos, you can see here the market has had just an incredible run. Um, right here, if you go right here, October 26th, it was at 41.17, and now it is at 45.38. That is a historic run. That's one of the best Novembers, just probably ever. What caused it? I mean, pick your reason. Inflation reports coming down as OER finally started to show up correctly. Um, it's just I guess this would be the big chart that everybody's kind of watching now, finally. But, you know, new tenant rent index versus the CPI, as you can clearly see, the only way that this is going is down. So all those people talking about reaccelerating inflation, I just don't know what they're talking about. I don't think they even understand how the current CPI, they should know how the current CPI is put together, but I don't know. It doesn't make any sense. This is the real lagged Federal Reserve effects. Um, right now, the market has priced in that the Federal Reserve will cut, or maybe cut by March, something, and in 100%, I think it is, or maybe it's 90% today, but by May, 100% chance of a cut. Um, that's possible. I imagine that this data is just going to feed through. At some point, you would hope there would be, if there was a sharp increase, there should be the sharp decrease. So in 2024, this data should come down in a dramatic way as the information feeds through. So how's the portfolio doing? What's going on with the portfolio? The portfolio is pretty awesome right now. Kind of flat today, so I haven't even updated my sheet. But just to give you a general idea of what's going on, so I sold 5,000 of BST. I took 1,000 and put it into my money market fund here. And then, because BST is the thing that has run the most actually in my portfolio because it's technology. So, and then I took money and I put it into my credit card. So I will show you. So prior to me doing that, let me give you just a general idea of how ridiculous this month is. So this is after me doing that, 3,403. So, and this is also after me paying property taxes. So property taxes for me were like around 800. So if I add that back in, and then let's add in back the cash number, which, let's say if I add this number back in right here, if I add that number back in, this month has been ridiculous. Prior to me selling that stock and then using money for my tax return, that's how much I was up for the month. So as you can see, what happened with selling the stock, my dividends were obviously affected, but $250 worth of interest versus $300 a year, you do the math on which one's worth it. Um, that credit card is made for emergencies, and I've been using it for like dental stuff, so it makes sense to. This is just sheer gains. So if you're wondering, like, oh well, no, that's maybe like contributions you've made to the market. For November, I haven't really been contributing anything, um, because I was saving up money for property taxes. So I've been making money, but I've been saving it and then using it for like bills and stuff like that. So I only contributed $350. So this massive number right here is straight up market gains. And no matter how far back I go in my portfolio, every time that I find something that's maybe higher than this, it always involves me like taking out a loan or something like that and taking on new debt. That is just flat out market gains, and it's insane. So easily my best November, probably ever, at least until we have another market crash or something. So what caused it? I mean, obviously, is right here. Um, the Federal Reserve decided they were going to issue on the short end, which means down here. or not there, but not the 30-year, but they decided they were going to issue up in this area, up in there, for the next 3 months, which is a very large amount of issuance. And then they also, we also just had really good CPI reports. Let's see if I got a copy of it, but we just have a lot of data coming in that just shows things just completely rolling over. Um, and then also, we're also having something in the economy which is kind of weird. You kind of maybe have to pause on this screen right here to kind of see what's going on here. But I took this from Schwab because they put out a report for 2024 to try and explain what's going on. And right now, we're basically in rolling recessions. Each part of the market is going through a recession at a different time. So to have a full-blown recession where you have job losses in every part of the economy, you have to have, recessions pretty much everywhere all at once, or most of the places. So what's going on is we're having recessions just in different spots at different times, as they tried to point out. So this goes from 2020 to basically now, and it shows like at different points in time, each of these things has been going into recessions. But as you can see, they've been coming out of these slumps, and then something else will go down. So that explains the consumer surveys that kind of show people just kind of down and stuff. Also, you might be asking yourself, well, okay, well, they're why if they're issuing on the short end, why does that matter? Well, this is the simple reason why. And if you follow Andy Constant, he put out a huge video that explains all of this. But basically, this is what's going on. So this is was as of March 31st. You can see this is people going to the reserve repo window for the Federal Reserve, and they pay more at the window than you do from the Treasury market. So it's kind of weird how repos work, but basically everybody was going to the repo window. Well, now that the government's issuing so much debt on the short end, well, guess where money market funds like to hang out at? On the short end. So you can see just a complete shift. All this CS says repo, 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 repo as the top percent of assets. Now if you go over here, the big one is down to 17%, but U.S. Treasury, U.S. Treasury, U.S. Treasury, U.S. Treasury. So U.S. Treasury. So what they're doing is they're locking in these rates for at least 2 years. So money market funds will do pretty nice for the next 2 years. So as you can see, and more of this is going to happen. So you can see it as like the repo numbers come in and who's bidding for what. Is they're coming in less and less. At one point it was 2 trillion, now it's below 1 trillion. So it's going to keep going down as the Federal Reserve or as the Treasury Department has to issue more debt. So that's kind of what's going on there. And then, that's kind of where we're at right now. Where do I expect the market to go? Um, let's see if I got charts that show different things. Um, I think the inflation numbers are obviously going to keep coming down. I think by the time we get into 2024, the big story is going to be deflation. You kind of see Biden talking about it today because he has to start running for president, right? So Biden put out a thing today that basically said, hey, look, inflation's coming down. The latest number says it's at 2.5% basically. Why are you CEOs still talking about inflation as the reason why you're raising cost? Of course, people on Twitter are like freaking out about that, but I think he's right. Um, and then also you have just these different leading indicators that are still showing recession. Like we should be in a recession right now, according to the leading indicators. They've never been this wrong before. But so Biden has to change that perception, and then also the Fed is trying to stay apolitical, but I mean they have rates at 5% or 5.5% going into a presidential election year, and then also this is what your banking sector looks like currently. Um, these banks are still holding, so we should have had a regional bank crisis. I don't know why people forget about this because this is what the regional bank balance sheets look like. This is what Schwab's balance sheet looks like. This is what they're holding all this stuff that was issued for years in here. All this stuff that, like all these bonds that were issued in here that were very, very low rates, they're now worthless. If they had to sell all of this stuff, they wouldn't be able to sell it for anything. But now they still have that BTFP program from the Federal Reserve and the Treasury and all that. So now this right here is not impacting them. There should be nobody issuing loans right now. There should be like the auto market should be shut down right now. The home loan market should be completely shut down right now. This should all be completely shut down. Like we should be in a brutal recession right now and rates should be zero. But because they stopped the regional bank crisis and they can just have this and people can pretend like it doesn't exist, there you go. It's just how things work now, I guess. Um, and then this is like all the data that came in. So this is where we're at on all the data and whatnot. We still have a lot of data to come in, but these were the big ones that came in. PCE inflation month over month and PCE inflation year over year came in lower than expected, and that just rallied the market hard. So what's my thoughts? Let's say my thoughts on the market right now. I guess my 2 cents on what I think we got the rally out of the way. I don't think there's going to be a Santa rally. I would be shocked if December's up 2%. You can call it a good month. Um, I don't think the market's going to try and take out the prior highs. The prior highs are right around 4,800, and the prior high in this bear market cycle was right about there. And if you can take a guess where the market's currently trying to get to, and it keeps rejecting it, it should have hit it this morning actually. But you can see the prior high, or not the prior high, but like the prior like high during this bear market, at least in 2023, was right there. If we break above this, with the Federal Reserve also talking about doing cuts and or maybe pausing or doing something, we could break higher. I think for December, Powell's probably going to come out and talk about doom, and I don't know what Powell's going to talk about, but he could tank this market really hard if he wanted to. I mean, if he comes out tomorrow talking about rate hike possibilities and inflation has much more to go and all kinds of crazy stuff, then I think the market could probably tank a little bit, maybe by like 3%, something like that. If he comes out and just talks about, we've made progress and we're happy with that progress, I think the market rallies tomorrow pretty hard, even though people like to sell on Fridays. But yeah, we kind of have to see. Like I said, if December's up by 2%, you can call it a good month after having a almost 13% run in November. Um, for 2024, like I said, I think the story is going to be deflation. I think these reports are going to just keep coming in and just keep crashing through the floor. There is so much evidence that shows that they are way, way too tight on rates right now. Like, yeah, they are way too tight. Like, there are so many things that are just coming in right now that are just screaming recession if you keep rates this high. Like, things break really hard if they keep rates this high. Um, they have to know that. Um, the guy who's over the Philadelphia Reserve yesterday was talking about it. That's because his area is in flat out recession. It's pretty rough. But the one who represents Virginia, like that area, they came out and basically said, "Oh, things aren't that bad. We can keep rates this high." You know, as it continues to kind of tank the economy and spending continues to slow, I imagine you're going to get more Fed members talking about it. So maybe March is correct. By then, I imagine OER is completely fed through, and we're talking about inflation under 2% without a doubt. Unless spending just magically picks up, which it could be for tax time. But if people don't spend their tax returns on like stuff that would cause inflation, I mean, this market's gonna do some weird stuff. Um, so right now, bad news is good news. Good news is bad news. That's the way to look at this market. That's how it was for the last decade. So I guess that's kind of where we're at. If you're a dividend investor, whatever. Um, right now, I'm just basically putting money into my little savings account that I have on here. I'm not really adding too much here. Um, I got dividends and I got $160 worth of dividends that's about to pay out. I might buy like some SPHD, but I might put it into the savings down here and wait for a possible sell off. Or, maybe I'll put it into BBN. I don't know. But I'll just keep adding. It's obviously working. So that's kind of where we're at. So just let me know if you have any questions in the comment section. Thank you so much. Bye.